Welcome to the show, everyone. I'm very excited to have back on the channel Nicholas Merton, the host of the ever-popular Datadash YouTube channel. Nicholas, how's it going?
Lark, I'm doing good, man. Thanks for having me. I appreciate it.
Always great to have the chance to speak with you, man, without a doubt. Now, we're going to be going through a lot of great topics today. We're going to be talking about the Bitcoin markets, we're going to be talking about gold, we're going to be talking about the equity markets, altcoin markets, ETH 2.0, lots of fun kind of stuff. So make sure you stick around. It's going to be a fantastic chat. And I think a great place to start this conversation off today is, do you think that we're at the start of a bull run kind of situation on par with what we saw back in 2016?
Absolutely. Yeah, I think that well, it really depends. I guess a lot of people would argue, and it really, I think, to start off, I think it's important to have a definition of what we kind of consider a bull market. I like to keep it very, very simple and determine when the bottom of the bear market is in, and then really kind of determine, in this case, what stage of the bull cycle are we in. So I think that ever since we set the lows back in December of 2018, I think that we have finally set a bottom in. We are on the earlier sections of the bull market. And really the first thing you have to do, the first objective for Bitcoin in this case, in order to really go from that previous bear market, is to get up to its previous highs at 20,000. And that's definitely going to be a difficult challenge for Bitcoin. But I think with the halving event, with the current macro environment, it actually makes it quite attainable. And when you consider the scale of market for Bitcoin, it's not a crazy goal to think that Bitcoin could go to 20,000. These kind of astronomical numbers can sometimes get us a little bit give us the impression that Bitcoin is overinflated, already overvalued, because many people are under that impression they can only buy one coin. But in reality, it's just a few $100 billion in market capitalization compared to gold right now, which is 10 trillion. Equity markets abroad in the world, nearly $100 trillion market. And then you also have bonds and government treasuries in the United States, which is another multi-trillion-dollar market. So this is the evolutionary cycle of Bitcoin maturing. The general kind of thesis I have to your question, Lark, I think it's a good one. Where are we in that cycle if we are in a bull market? I think that what we're seeing right now is, a general breakout of a very long-term wedge. We've had this kind of way down of price for Bitcoin since back in 2017 at the peak of the bull market. And we've also been setting higher lows, even with the crazy sell-off we had back in early March. We fully recovered from that, and now we're up again a month later, trying to press up, a month and a half later, give or take, press up against that resistance. And after the halving event, where many people expected that sell-off, we're seeing a press up again at resistance, waiting to get above back to 10,000. And I think it's going to charge forward towards around 11,000 here over the next 2 or 3 weeks. And then eventually what we'll do is we'll come back down, we'll test that resistance, make it support, and then we're going to leap up forward over the next few months, towards 20K.
That is a great scenario. We've been talking about, everyone who's been watching the channel, they know about the resistance line you're talking about there, and it's really been this just amazing, looking at the technical analysis side of it and how it's all playing out. It's beautiful. It's beautiful. So hopefully you do get that break that you're talking about there. Now, one thing actually you brought up, and I actually made a video talking a little bit about this yesterday with my kind of Bitcoin price predictions video, when you see all these guys talking about big numbers and stuff like that. But one thing that came up actually was you mentioned about gold, right? Or about how people are not wanting to buy one Bitcoin because potentially the price is very large. I feel like we're going to get to a stage, and we're already starting to get there with the whole, stack sats kind of thing, where we actually have to have this, I think, switch for people, because a gold bar, the ones that they have in a central bank, those kind of gold bars, the price of one of those is around 650,000 US dollars. So that's kind of the large unit of a count of gold, right? So not many people are out buying a gold bar, but people are out buying an ounce of gold or a gram of gold or a few grams of gold. So I think we will start to see, as we do move forward with Bitcoin, we do start hitting these quite high prices, perhaps a mentality shift in people towards the way they actually look at acquiring Bitcoin. And having one Bitcoin is going to be like, wow.
Absolutely, man. Yeah, I think it's a very interesting challenge. It's been a challenge from the start. How do you actually go about marketing Satoshis to people and understanding what that is? Because so many people, if you look at every major world currency, that was the original issue, is Bitcoin was promoted as, peer-to-peer cash. But if you think about cash or any other existing fiat currency, the interesting thing is that all of them usually end at about 2 decimal points. One of the few exceptions would be the Japanese yen, that doesn't have any decimal points. You just have usually 100 yen equaling a dollar, and basically 1 yen is the smallest you can go. So I think it's an interesting challenge at the end of the day to really go against that kind of 2-digit system. and finding a way where you can actually promote Bitcoin through Satoshis. I think a lot of apps out there, I think, for example, like the Fold app, I think Lolly as well, all these kind of new consumer-facing applications have done a really good job of just showing you like, hey, you can earn fractions of a Bitcoin. So I think it's going to be a matter of showing to people through a variety of different consumer-facing ways how easy it is to own portions of Bitcoin without exposing yourself too widely. As I've been talking to you, Lark, and stuff, one of the things we're doing in the project that I'm working on is we're actually coming up with our own unique way to really make it simple to start getting exposure to crypto and actually not have to spend a single dime of your own money. So this is something that I've really been trying to think about over the last few years, because if you can provide an easy way like that, I think we get a lot of people not only involved in the crypto space, but giving them enough exposure to where if there is that inevitable, possible scenario where, there is a collapse in fiat currency, whether it be that something as strong as the dollar or another world-renowned currency that we just didn't expect would face this kind of problem, that they would have that exposure to a hedge that could help them in that case scenario.
Very, very interesting. We're going to talk more about your project here in a few minutes. Nick is working on a very, very interesting project, so we're definitely going to dive into that a little bit. But I wanted to ask you this question before we start kind of going down that direction. We see, this momentum building for Bitcoin right now. There's so much excitement, and then we look at the equity markets, we look at the economy, we look at everything that's going on. We see that there was a shorter period of really high correlation between Bitcoin and the S&P 500 and things like this. So what's your feeling on the equity markets moving forward? And do you think that we're actually going to see a breakaway moment for Bitcoin from the equity markets, especially if the equity markets start heading south again?
Yeah, absolutely. I think we've started to see a divergence off of equities over the last few weeks. There's a reason why there was such a direct correlation, and it's because at the time being, all markets were subject to one rule, and that was that people needed cash. They needed not only US dollars, but they needed any form of currency: euros, British pounds, Japanese yen, Chinese yuan. Everyone across the world, whether you're mainly involved in equities, involved in, for example, operations in property markets, bonds, treasuries, other markets like crypto, you're going to be exposed. Even gold and silver, we saw, which are supposed to act as hedges, fell into a massive liquidation event across the board. Silver went down to around like $11.5 to $12 an ounce. And silver had already seemed relatively cheap at the time when it was up around anywhere from $15 to $17. So the reason this happened was because across the world, and I think you probably understand this very well, Lark, there was an issue of liquidity. A lot of people, as we started to see equities collapse at their fastest rate since the Great Depression, a lot of people were short on capital. A lot of people were overexposed on margin positions. And much like how in crypto there's margin platforms, in the traditional markets, people were exposed on excessive leverage. And this basically made dollars the king asset of the world. Everybody wanted it. So this is why the Fed has been injecting a new quantitative easing program alongside other central banks like the ECB and the Bank of Japan at a record rate that we have yet to see in history. It has outpaced, as of now already, it has already outpaced the previous 3 quantitative easing programs that we had over a multi-year process after 2008. And this is one of many operations that the Fed is going to undergo, not just printing excessive amounts of liquidity, but they're also going to probably toy with the idea that Europe and Japan have done for a while, which is negative interest rates. I know this is something that's been talked about by many people, including myself, but I'm just really eager and interested to see what that world's going to look like in a world of negative interest rates, because I can tell you, there's only a few assets I can think of doing well in a world where there's negative interest rates and excessive printing. It's an asset that can't be printed into oblivion, and an asset that, though it may not provide a yield to you for holding it, it's not penalizing you. And I think that that's not only Bitcoin, but I think it's gold and silver. And that's why I think these 3 assets are really given a lot of room here in this environment to grow to levels we have yet to see.
It's interesting you bring up Japan, because we look back in the history of Japan and Japanese markets, and we see that there's this, I think they call them like the lost decades or something now, of just this economic savagery that happened. So we had this giant run up in the markets back, I'm pretty sure it was the 80s. And then it's just an epic crash. And Japan's never really recovered since then. It's just been pain after pain after pain, and, negative rates and all this stuff. Now Japan's printing $1 trillion, probably more. I'm sure more will come. All the central banks, I can't keep track of how many trillions are being printed at the moment, but it's absolute insanity. So there's a fear, I think, that you could see a situation like Japan actually playing out in a major economy like the US as well, where we enter this multi-decade period of bad trouble, basically.
Yeah, to build on what you said, like you hit the nail on the head. There's a documentary called The Princes of the Yen, which is always a very good precursor to just in about 2 hours summarize the biggest bubble we've ever seen in history. A lot of people don't know about it here in the United States, and I think generally abroad, unless you live through Japan and stuff and have family who were affected. Just to kind of put it into perspective, I can't think of the name of the park right now. There was a garden or a park in Japan that was worth more at the peak of the bubble than the entire real estate market in the United States. It was something crazy like that. Yeah, the valuations were excessively artificial because this was the first time throughout history that we had seen a level of central bank monetary policy like this. And this is a big reason why Japan, out of any country, is the first to experiment with negative interest rates, with the central bank buying up equities and ETFs. They are the largest shareholder, and I think the top 10 major companies, they're one of the top 10 shareholders in every single major company in Japan. They own about 75 to 80% of the ETF market. Imagine for a moment, Lark, like in the United States, I mean, we rag on the Fed a lot here in the US. But I can't imagine a world where the Federal Reserve owns 80% of the the SPY ETF for the S&P 500, who owns maybe 2 to 5 to 10% of all Apple shares, and continues to showcase that it wants to buy more. And the sad reality is this is likely where we're going to. It's sad that the thing is the Fed is just going to slowly kind of like a frog in a boiling pot of water. They're going to slowly increase the temperature. They're going to slowly start buying up ETFs, broad index ETFs for the market. They're going to start experimenting with new types of forms of monetary policy. What it is it's injecting new cash into the system. It's creating artificial buy-side demand. Both of those inflate assets. And to one thing you asked, you kind of go way back to a point you asked about earlier about the equity market. My general take on it is I'm not bearish on equities at all. I don't think the real economy is going to see a V-shaped recovery, but I have no doubt that assets could go all the way back up to all-time highs, because that chart, the S&P 500, the Dow Jones, the NASDAQ, even individual stocks like Apple, they're not doing one thing, and they're not adjusting for inflation. So even though on a book value, these companies could be going down and dealing with a lot of issues, credit is unlimited. I mean, anyone's going to be buying up in this environment. So I would not short the market. I think buying, puts, I mean, it looked like a good opportunity as COVID was happening, but to see it, post-COVID, where the central banks across the world, everyone's on the same page, it's going to be a very interesting environment. I think the person who's going to get hurt the most is the saver and the long-term investor through treasuries and government bonds. Because even though on book value bonds might be going up, as we usually see an inverse relation as rates go down or yields on the bonds go down, the prices go up, they're not holding it for the spot price going up. They're holding it for the yields. So they're going to be penalized by the negative yield that starts to be accrued by owning it. And then eventually, once those yields correct, the inline bondholder is going to be holding something that's worth a lot less as the price will correct. And savers used to be able to earn a yield on their money, and now they're starting to possibly deal with the issue that European citizens as well as Japan citizens have dealt with, which is being penalized for saving. So again, I think you talk about something that's authoritarian by any means, forcing you to spend your money in the economy. I just think that's a terrible thing. And if it was talking about like a lot of people hoarding wealth at the top and stuff, maybe that's an understandable argument. But this is everyday people. People don't have their money in the stock market. Many people don't own properties. The one example that I would use just to summarize this and why it's bad for everyday people is that the bottom half of the United States, just for example, the bottom half of the United States owns half a percentage of all the assets in the world. So 0.5%. Right, in the United States. And that's including all government bonds, properties, equities, you name it. In this case, we have the top 1% that owns 40% of all assets. So this is a huge divergence we're seeing. And central bank monetary policy, that the Fed will basically state that they can't, directly deliver money to your bank account, but they can surely bail out hedge funds. They can surely play into the same kind of general kind of
buy junk bonds, right?
Yeah, exactly. Buy junk bonds that people who were buying them knew were bad. Who knew they were risky. And again, this is not a partisan issue in the United States. It's just it's a sad issue that a vast majority of the country, I think, doesn't understand just what kind of ramifications this monetary policy that the Fed has enacted has on our everyday lives. It reduces our purchasing power, and it'll penalize us in the long term as everyday people.
I did some math the other day just for fun and looked at what this actually does to someone over like a 10-year period, right? And it's devastating. Even the inflation, right? If you put $1,000 under your bed back in 2010, the inflation alone makes that, you know, worth a lot less, around 20% less today. But if you start bringing in negative rates and stuff like that as well, imagine having that money sitting in a bank account. You got, you know, what might, after all the dust settles, maybe we're looking at 3% inflation for the year, right? And so we got these large inflation rates. You have what Europe's got, negative 2%, I think, in Europe. Don't quote me on that number, but regardless of what the negative rate is, you're losing. No matter which way you look at it, you're losing. I think this is going to hit regular people way more than it hits the big guys, because the big guys, the rich people, what do they have access to? All these high net worth individuals and family offices. They can take all that cash and plow it into the stock market because the government's already said the stock market's not going to fail. The stock market's too big to fail. We'll keep pumping money in to ensure that it doesn't fail, so they can put money in the stock markets. They can buy massive amounts of gold. They can, of course, you know, buy large quantities of Bitcoin. Some of these family offices and high net worth individuals are getting into that. Or they can move their money overseas to a jurisdiction where they don't have negative rates. So they can play the game by moving the money around, where regular people, you know, your regular guy just trying to make ends meet and get through his life, well, you're going to have 2% of your savings account taken every year. That's a vicious, vicious cycle, man. So it's no wonder we see people increasingly interested in hard assets like Bitcoin. And of course, gold has been very popular during this crisis. We've seen those photos of lines out the door at the bullion offices in a lot of places around the world, people rushing to get hard gold in their hands. So what is your feeling on gold right now? Is gold going to be the kind of hard money asset that lifts all boats here?
Yeah, no, just to pull up a point that you were mentioning there earlier, Lark, in the sense of putting your money under a mattress and then talking about being penalized in a savings account. It was, I think, Warren Buffett who actually joked when he was talking about Europe experimenting with negative interest rates. He has a company there, and every year I think they're losing about like 1 point something million euros just simply having their money in the bank. Think about that. If you have €1 billion in deposits and you have negative 1% in this case, or sorry, I would say 100 million euros in deposits, you know, you're losing €1 million every year. Like it's incredibly, the ramifications of this are huge. But towards your point in this case, you know, in regards to about gold, going back to what we talked about earlier about gold spot price dropping, ironically enough, that's what happened to all the futures contracts and the paper contracts. But many people don't know that if you're talking about physical markets for gold and silver, it was doing the opposite during that liquidity crunch. People were actually paying a massive premium to get physical gold and silver. And this is one thing I always emphasize. In the United States here, we have GLD, we have SLV, which are some very big ETFs that a lot of traders like myself have used over the years. And I had no problem utilizing them to do short-term positions. But if you're really talking about getting, you know, gold or silver as a portion of your portfolio, and again, I can't advise anyone to do anything financially, but if you really want to own gold or silver, there's no better way to do it than owning the physical stuff, because like for GLD and SLV, for example, these paper contracts that track the price of gold and silver will inevitably start to diverge off the real physical thing, because there's a massive case of rehypothecation. And it's a very, I bet you've probably talked about before, Lark, but it's a very fancy term for I've got one real version of the asset and I'm going to create 3 paper contracts, or 5 or 10 or hundreds in the case of GLD, for that exact same actual physical asset. Now, the thing that people also tend to forget too is that with a lot of these rules in these ETFs, as well as futures contracts, some of them aren't physically settled. You don't own the underlying asset in many cases, even though you own the ETF. So even if you, let's say, for example, many people think, okay, maybe there's 100 contracts for every piece or ounce of gold. Maybe at least they get 100th of that. And in reality, you don't. It's not owned usually by the end ETF holder. So what we've created is this massive artificial way that inevitably actually suppresses the price of an underlying asset when you have a ton of paper contracts that aren't physically settled. And this is the big issue that people usually bring up about Bitcoin futures contracts and things the like, is that it actually suppresses a lot of liquidity from the base spot market, where there'd be real actual, not per se physical ownership, but actual ownership to some degree. And why things like backed, even though they are futures contracts, they're physically settled, which is really good.
What are your thoughts on, we see quite a few projects now launching gold on the blockchain. So one-for-one backed, grams and ounces and stuff like this. You think that's an interesting alternative for people, or would it be something you would do?
Yeah, so for me personally, yeah, I would actually own a little bit on these systems and stuff. Like just talking on like a complete like trust basis, it would depend heavily on who the company is and who they have auditing their holdings. I think it's a really good medium, and I always try to be very practical about these things because if you can own physical and you feel you can defend it or put it somewhere safe, then yeah, own physical. I even own a little bit of physical gold and silver, not a crazy amount, but a little bit, just to make sure I have some just in case. And some was gifted actually. It was ironic enough when I went to Australia and stuff. Someone gave me like my first silver coin
Nice.
when we were. Yeah, it was really cool. It was like someone from our channel and stuff, which I thought was really nice. But in the sense of not being able to own physical ownership, if you want something that could be a middle line between these kind of worthless paper contracts that eventually are going to come to roast, I think that it's a perfect medium because you not only have something, a token on the blockchain that is a tokenized version of ownership in this case over a given asset that can't be stolen from you in this case if you own your private keys in a safe manner. But along with that, if the actual gold is being kept in vaults, it's being audited by a reputable institution, in this case on a residual basis, then in that case, I think it's actually very fair. And one big thing that it opens it up for is maybe not here in the audience of the channel, but to a lot of people in a lot of developing countries. My project right now, one of the things we want to do is not only give people exposure to crypto assets, but a big thing as well is give them exposure to gold if they want. And if they can't find a physical way to get ownership of gold, or they're worried about the government coming into their homes
Hmm.
and seizing gold ownership or
Yeah.
silver, that's where a digital ownership can be huge because though, for example, they might find a way to get access to your private key, it's much more difficult to know whether or not Lark or Nick has gold or silver in his holdings in this case, if they don't know your address, if they don't know how to get access to your private key. So in this case, it's a very, very interesting medium for my take.
Well, and digitizing it makes it quite easy to spend, right? Where it's a little
Yeah.
difficult to take out your gold coin and shave a little bit off and get the right measurement if you want to buy something. But you could actually now use gold as a much more useful medium of exchange with your local merchant or whoever it might be by sending some portion of gold across the blockchain to their blockchain wallet. So that's pretty interesting too. I think it opens up a lot of potential use cases for people as well who, well, maybe I don't want to, maybe that person doesn't want Bitcoin for some reason, or maybe they don't want US dollars, maybe they're gold and they want gold, and you can actually now make that useful in terms of payments. Now, I did want to dive a little bit more into your project here before we start talking about altcoins. So you can just tell us a little bit about what it is that you're doing and kind of, the why of what you're doing, what you're doing.
Absolutely, yeah. Well, so there's not a crazy amount I can talk about in regards to the project as we're planning to launch in June, but we've been keeping things under the radar for now. But to put it simple, over the last few years, I've been very passionate about cryptocurrencies and before that, financial markets. And the biggest issue that I ran into is that we haven't created that next bridge that's going to grow the cryptocurrency ecosystem. I think, as you know, Lark, I mean, we've been at less than 1% of the world population adopting cryptocurrencies by most estimates. And it's just simply too stagnant. It's too slow. I don't think we've built something that works good as a consumer-facing application. But along with that as well, we haven't really built something that is really going back to the roots of what crypto is about, trying to push things in a decentralized way, but at the same time, really promoting the utility functions that are available in the space to a wider audience. I mean, there's a lot of great things. There's these lending protocols out there on the market that allow you to earn really great rates of interest on your favorite stable coin of choice. So now everyone can have exposure to dollars and they can get the best yielding opportunities in the market. They can interact with decentralized exchanges and be able to make peer-to-peer transactions that can settle faster than a lot of other standard bank transfers. So we're working on something that's aiming to aggregate a lot of these services together. And we'll have some more information in early June, but I'm real excited to be putting it out there. And as we talked about earlier, trying to create as many easy ways for people to get introduced to this space rather than having to take what they have in their savings and buying crypto. We want to offer that as a service, but at the same time, making it where people would be able to simply get exposure through ways that don't require you having a large amount of savings or putting those
Mm-hmm.
savings at risk.
We need really really good tools. I think that's the exciting thing about, if we go back to the first question, the coming bull run and all this stuff.
Right.
Let's go back to 2016, 2017, right? I mean, look at what was available back then. I mean, the infrastructure for the entire crypto economy is just exploded in a massive way. We do now have reliable lending companies. We have so many more exchanges, so many more fiat on and off ramps and all this stuff. So it's a very, very exciting time. But even then, we still, I see this all the time in my comment section. Just it's confusing. Where do I do this? Where do I do that? How do I get this coin? Right? If you have this kind of one-stop shop, or as close as a one-stop shop as you can get for people being able to come in and access lending services, borrow against their crypto collateral, do these different things like this, actually have opportunities to earn crypto, it's going to really change things up for people. And the more we can get those kind of tools into the hands of people who really, really need them, where we're talking to people all across the developing world, people who are wanting to unbank themselves or underbanked or just sick of the system, whatever way you want to put it, get those tools into the right hands becomes very, very exciting.
Absolutely, Lark. I think that's the key message, just building an all-in-one finance platform. What I've realized, even as someone like myself who loves finance, it's still an extremely complex process, and it gets more complex with the more you want to do. If you want to have a way to trade stocks, if you want to own, buy gold or silver, if you want to manage your savings, budget your savings, pay your taxes, do all these different things, or even buy crypto, it just adds another layer to that complexity. And even in the modern world, you have to download about a dozen different applications in order to properly manage your finances. And that shouldn't be the standard. What you put up as an equivalent to your bank should be that one-stop shop, right? Your bank hasn't done that for the last few years, and really for the last few decades as we moved into the world of technology and opening up opportunities. They've really kind of squandered the average everyday person. So I think it's time we see something that can hopefully be that all-in-one finance app. And that's really what we're trying to work on. So I'm excited to share it with you and get your take on it, as well as the take of many other people, because if we can't build something for the everyday person that makes it extremely simple and opens up these opportunities to everyone, and in the end wants to leave a lasting impact on the world around it, then I don't want to be working on it. Those are really my three key drivers.
What's the point, right?
Absolutely. Yeah. You gotta
go big or go home.
Yeah, exactly. That's the whole thing about life. You get one shot at it and stuff. So I hope we can leave an impact. And I think, as you mentioned, Lark, that there's a huge evolution going on in this space with decentralized finance, with better user experience that's going to make that wave possible. I don't think it's just going to be us. I think it's going to be a lot of great companies and projects. And I want to surround myself with those people who are making those effective changes in the space and really leading the way forward.
Very, very nice. Well, we'll be looking forward to more information about that when, of course, we do see it, taking its sort of public debut in June, hopefully. So we'll keep an eye out for that. And, of course, be sharing with everyone here on the channel when we do see that come out. But I want to finish up our conversation today, but just talking just a little bit about the altcoin markets. I know that the Bitcoin halving kind of, sucked all the air out of the room, so to speak, in the lead up to the halving. Everyone talking about Bitcoin, right? But now that the Bitcoin halving is done, there's not a lot on Bitcoin's event calendar for about another 4 years, so altcoins might finally have their time to shine. So what's your feeling on the altcoin market at the moment?
It's funny you said that, Lark. I think that's a great way to kick it off. It was the first thought that came to my mind the moment the 630,000th block came in and the halving was officially in. I was thinking how much people talked about it, how much people were excited for it. I was like, what's the next thing we're going to be putting our priority, our focus on, right? This is happening. We're not going to have it for another 4 years. So I think it's a good point. In the sense of altcoins, it's ironic or I think it's coincidental, because we just actually talked about this today on the channel. And the big point that I brought up here is that there's going to be a few things we have to see before we really see that next altcoin cycle. My time horizon, to be kind of conservative, but at the same time optimistic, is for somewhere in the winter of 2020, stepping into January of 2021. And the general thesis I have, there's kind of three signs we want to see across the board. The first one here is that Bitcoin has to get back to its all-time highs of 20K. If we can take anything from the previous price action of the last cycle, for the last altcoin cycle, we can see that the first one to ever really happen on scale was when Bitcoin went back up to 1,100 in the later part of 2016. And that was when I actually got interested in crypto markets. So what you get is a new influx of institutional and retail interest in crypto markets as Bitcoin, which many people doubted as it went down to $3,000 or $4,000, now charging back up to its all-time highs and breaking out to new levels. That gets a lot of people interested. So again, me buying my first piece of crypto and stuff then is a good example of that on a visual level. So we had the first one there, and the second one happened at the peak when Bitcoin had topped around 20,000 in December of 2017. After that, the liquidity flows out of Bitcoin into these other more speculative or interesting projects that offer different forms of utility outside of Bitcoin. And that's the general thesis. It makes sense, right? You see this a lot of the time in other traditional markets. You see this in gold to silver. liquidity initially rushes into gold, as we've seen with the gold to silver ratio. Now we're seeing silver heavily outperform gold as it's a smaller cap and more riskier investment. So again, that's a big thing. The second thing we want to look for here for an altcoin cycle is for, in this case as well, a lot of the leaders to start showing a lot of progress. And this starts off really by looking at Bitcoin dominance. We look at it in an inverse way on our channel through altcoin dominance. And the way that you can do that actually through a charting application like TradingView is taking the value of 100 and subtracting Bitcoin dominance, or BTC.D. And it prevents an interested inverse chart where it flips it up and showcases altcoin dominance. And right now we're going through, much like Bitcoin, a very long-term wedge since back in 2018. And we're getting to this point where we could see a breakout. So what we want to see is a breakout above that line of resistance, make it support, and eventually rebound for the sky for the next cycle. The third component here, going towards, again, that topic of altcoin dominance, is looking at some of the major altcoin pairs to Bitcoin. So Ethereum and Litecoin to Bitcoin, ETH to BTC, LTC to BTC, and seeing when we start to get towards some very specific ranges that we've been watching for. Again, all my estimates are pointing that we're probably going to see that here in the late fall to the beginning of the winter. In this case, as Bitcoin starts to probably get back up to that $20,000 level post-halving event. Some of the altcoins that I'm interested in, as I kind of alluded, I think we've talked about it a lot, Lark, is the DeFi space. I think there's a lot of interesting projects. The first one that I know everyone's been talking about is Chainlink. Chainlink is really interesting alongside a lot of other players that are aiming to fix the issue of the Oracle problem, which, to put it simple, is basically communication of smart contracts on blockchains like Ethereum to the outside world. I think there's a lot of interesting other competitors, or I would say not so much competitors, but players in the space that are offering their approaches like Teller and Band Protocol. The only one I own right now is Chainlink, but I am looking at those other ones. The other things that interest me are decentralized exchanges, as well as decentralized lending pools. So players like Kyber Network, which I've been following since September of 2017. And along with that, other players in the decentralized lending pool space like Compound, which have just recently issued their own governance token. And these systems are now, as we've talked about before, building their own governance protocols where people, stakeholders and token holders can actually have a say in the government for these systems. And I think it's incredible to see it in a decentralized framework on these public blockchains. And I'm trying to think, outside of that, I think there's a lot of other things. Anything related to DeFi or enterprise blockchain has really got me pumped, because I think those are the two areas that, again, Ethereum has missed. I think the general Ethereum ecosystem has just finally come to realize something that I've been trying to push for the last year and a half, that finance is the killer application for blockchain. And second, for all the other use cases, it's going to be on the enterprise side, as using Ethereum as a middleware solution alongside other traditional tech stack systems that enterprise companies already use today. So anyways, I know I rambled on a bit, but hopefully that answered it pretty good. I'm interested to get your take as well, Lark. What do you kind of think is interesting right now?
Yeah, a pretty similar feeling at the moment. I mean, the only crypto altcoins that I've really been buying outside of Bitcoin and Ethereum is kind of my weekly dollar cost average. Get a little bit of those every week and just set them aside. But in terms of altcoins, really the only thing that I've been buying over the last really few months at all has been Kyber Network. I mean, I'm super excited about their staking. I've been a big fan of their product for a very long time. So I'm really excited to see this evolution. I mean, it was nice, a token before, because it was a deflationary token. Now it's a deflationary token with staking rewards. It's just like awesome.
Yeah.
Very, very excited about that. Synthetics, another one that's been I've been building a position into. Kava is a very interesting one, because we talk a lot about what's happening on Ethereum, right? And most of the work is happening on Ethereum right now, but Kava is actually bringing in, it's basically a MakerDAO style system, but for multi-chain interoperability. So you can actually issue stable coins backed by Bitcoin, backed by XRP, backed by Binance Coin, backed by Cosmos, all this stuff. So that's very, very interesting. I think stuff like that has a lot of potential, but there's a whole other category of altcoins that I think don't have a lot of potential. And I'm interested to get your take on, I guess, the Ethereum competitors, because we see so many blockchains. It's hard to keep track of, man. I mean, so many blockchains. Oh, we're doing consensus a little bit better. Oh, we're a little bit faster or whatever, but no one's got the network effect of Ethereum, right? And no one even comes close. Like, no one even has like a tenth of what Ethereum's got in terms of what's being built on top of it. So what are your thoughts on all these other blockchains? Are there any kind of standouts for you at the moment, or are you kind of waiting and seeing to see if anyone can really get a critical mass behind them?
So yeah, to your point, Lark, I think the latter of the topics that you mentioned there, network effect, no matter what kind of argument you can make, no matter how great a white paper is, you are never going to be able to compete with the ultimate factor, which is network effect. And this is something I hate to put it like this because I know it almost sounds like, you're not prioritizing the best technology in the world. Ethereum comes with its flaws. It is not a perfect blockchain. It still has yet to scale. It's one thing we've been concerned about with our startup is we want to make sure Ethereum can scale because a lot of our services are going to be in a decentralized nature on chain. So, as well as privacy and a few other things that some other protocols are doing probably a better job of. The problem that a lot of people have yet to realize, and it's the greatest thing that I've learned when it comes to investing in traditional companies, investing in any kind of asset, is that at the end of the day, network effect is the most key thing. When you talk about actually, having a great network, it can be great, but if you don't have customers on it, and more importantly, if you don't have developers working on awesome applications on it, it can't be good. So that's the one thing that I always say, because that potential can't be realized. So any chain right now that is building something unique and interesting, while at the same time making sure that they give a transitional phase for people to move over from traditional systems so they can use languages like Solidity. So there are a lot of developers now that have actually learned the Solidity language who are really in keen with what's going on in the blockchain space. Energy is one of these. They're one of the projects that didn't do an ICO, but they actually are a combination of like the Dash network, the Ethereum network, and they're trying to combine both the treasury model from Dash with also the smart contract platform of Ethereum. I think that's a very fascinating approach. I've held a little bit of energy myself and stuff. I like the project. Tommy World Power is a really interesting guy. He's another cryptocurrency YouTuber. But in the sense of like the larger protocols that are still either doing major ICOs or IEOs, raising these total massive sums of money with nothing more than a white paper or very, very little technical difference from a lot of already open source code. That's the stuff to me that just it doesn't really get me excited, because until I see something I can do on there, like I can do on Ethereum, it's difficult for me to really get interested in it. And I know if I'm having a hard time really getting in tune with it, and I know there's many other great blockchain protocols and their philosophies like Cardano, like EOS. I've met people who work in these ecosystems and they're nice people. The problem is that unless you can find a way to capture that network effect and open up a whole new wave of developers and users that aren't in this current ecosystem, you've got to convince the ones that are in it right now. And I haven't seen it. It's been 2 years for a lot of these projects. And it's hard for me to think that now they're going to come out shining unless they really capture on the momentum that's coming up here in the next coming months.
Yeah, and we've seen some of these blockchains getting, users and stuff like that, and some of their applications are getting a lot of users. But yeah, I find it really, really hard to care about some of these chains that are, especially some of the ones farther down. And I've really tried with some of them too, like with EOS. I tried for a long time and tried to play with things. I didn't find it a nice experience. I didn't find it super user friendly. Don't crucify me, guys, if you're big EOS fans out there. It didn't really call out to me, or I just find Ethereum so user friendly, and it works, and there's useful things built on it that I actually want to use and I actually use on a regular basis. And I don't know, it's been a long time since I looked into the EOS ecosystem, but that initial impression, I kind of lost interest. And I think that's probably happening for a lot of people. And look, maybe the next wave of retail investors coming in will change that situation, but probably most of them are going to go to Ethereum because that's where everything useful is built.
To build I would say one protocol that I actually think has a lot of potential that originally had a lot of issues, but I think many of us were excited about the multi-language VM is Neo. I think that Neo has a potential chance because I'm very in close contact with a lot of the people who are working on Neo 3.0 and the developer toolkit. And the major thing that I met John Davidus and stuff. He's actually going to be helping with the startup I'm working on right now as an advisor. But he has such an interesting philosophy. He comes as an ex-Microsoft employee for over 16 years, and he helped build the .NET platform, which is one of the largest developer ecosystems in the world. And his philosophy for Neo as a blockchain is that we basically need to build an entire suite developer kit for developers. All right, you can't leave them in the dust having to learn a whole new language framework. His whole idea is bringing in a whole new wave of developers. And I haven't seen many protocols focus on this. It seems like as with most things in the crypto space, we're always trying to kind of push or pull one another who are already here. And it's the same with cryptocurrency conferences. It's the same way with our philosophy for building these new protocols and developer ecosystems. We don't ever try to bring new people in. And I really appreciated his philosophy on that. I think it's going to give not only Neo a chance, but it's going to encourage a lot of other chains to do the exact same thing. It's just a matter of who can win first to the race. As Paul Tudor Jones said with Bitcoin, it's who's the fastest at the race. And I think that that's where you're going to be able to determine who wins, no matter who has the better protocol on a technological basis.
There you go. There you go. Awesome, Nicholas. This has been an awesome chat, man. Without a doubt, I think we're going to leave it there for today. But man, thanks for sitting down, sharing some of your thoughts. I know we're all looking forward to what you're going to, unbox here for us here in the near future. So definitely keen to keep our updates coming for that moving forward. And just thanks for sharing your insights on the markets overall.
Absolutely, Lark. Thank you very much, man. It's a pleasure.
Thank you.